Welcome back at 9:16. Let's take a look at the big board right now. The Dow Industrial down 264 points, nearly a point. The Nasdaq is off by 90, and the S&P, well, that too is down 22 points right now. These numbers come as investors wait for the monthly jobs report that's expected to be released in the next couple of weeks or so. It's a number that will be watched closely by investors and economists, especially since June saw a big drop in consumer confidence with gas prices, groceries, and interest rates rising, and Wall Street saw its worst quarter since 1970. Here to talk more about overall health of the economy is host of Watchdog on Wall Street, Chris Markowski. Thank you so much for joining us, Chris. We appreciate it.
Pleasure. Thank you.
All right. So, as we mentioned before, Wall Street is wrapping up the worst 6 months start of the year since 1970. We're teetering on a bear market right now. What does this mean for people who are getting ready to retire and cash in on their retirement savings?
Well, I hope that many of these retirees or people that are close to retiring slowly but surely started moving their assets to at least some of them to cash and cash equivalents. If you need to have access to cash over a short period of time, whether it be for retirement, whether you're paying for your kids' college education, whether it be for a house, you have to stay away from risk assets there. Now, obviously, you're going to have to do some rebalancing. You don't go completely to cash inside a 401k if you're close to retirement, but the money that you're going to need for a good year and a half should be in those, so you don't have to worry about what good companies or quality companies you might have to sell in your portfolio just because the market's down. Markets over time, they're going to rebound and they're going to do well. It's all about proper asset allocation.
Right. So that's where you talk to your professional about that. All right. The Bureau of Economic Analysts reports that the U.S. economy shrank at a slightly faster rate than previously estimated during the first quarter. Are you now worried that we're closing in on a recession because of this news?
Well, I tend not to fear recessions. I don't look at them in the same way. I kind of look at them as almost like a lymphatic system of the human body. You're going to have to clear out some of the junk and some of the nonsense that we had in the past. A lot of free money floating around, a lot of companies at valuations that were absolutely ridiculous. And it's an opportunity for businesses and for investors out there, and even households, to reevaluate what you have going on. Okay, things are slowing down. Maybe I'll look at some of the subscriptions that I have that I don't need in my household, save a little bit of money. You want to come out of every single difficult situation. It's kind of the idea. It's a Taleb concept of being anti-fragile. You want to come out on the opposite side stronger. And what happens during recessions? There's a big monster element that is applied to it. The difference between this recession, if they actually call it or not, is the fact that there's 2 job openings for every one person looking for work right now. As bad as it is, as much as a gut punch it is with inflation, with the gas and food, which is killing people right now, at least we have that going for us.
Okay, I wanted to bring up 2 things that you mentioned here. People are going to be looking at subscriptions that they don't need. And we also said some of these companies were highly overvalued. Specifically, we're seeing a lot of issues now with tech companies. We're seeing issues with companies like Netflix, which their stock prices have dropped. Is that something that you're seeing? Is these dropping in prices, is it just a normalized price now instead of these hot valuations that we've seen over the past couple of years?
Well, that's what makes up a market. I mean, I always looking to buy things on sale. And, the funny thing, when stocks go on sale, it's the only store out there where people go running out of the store instead of running into the store. And many of these high-flying tech companies out there, I just take a look at what their multiples are. It's real simple. What are they trading at? How much money are they actually making? Many of these tech companies, a lot of the startups, quite frankly, they're going to have a more difficult time accessing capital, and they're going to go by the wayside. Again, seen this movie before. I mean, I saw it during the 1990s. A lot of those companies just didn't make it. And this is why you have to have high quality companies with cash on their balance sheets. Those types of tech companies have actually almost become value companies to some degree. Those are the ones that are going to be able to weather what's happening moving forward.
All right, final question here. The Federal Reserve Chair Jerome Powell said there is no guarantee that the central bank can tame runaway inflation without hurting the job market. And I know you touched on this just a moment ago, but does this cause you to have any anxiety a little bit?
Well, I mean, again, I think that, you're going to have companies that are going to start laying people off. We had some major ones already make that announcement already, Tesla and many others. That's going to happen. The good side of it is the fact that still to this point in time, if you want to find a job here in this country, you can go out and you can find one.
True.
And again, that puts a little bit of pressure when it comes to wages, but that's okay.
Yeah, all right. Thank you for joining us, Chris Markowski, host of the Watchdog on Wall Street. Thank you so much for your insight into what the market is doing and what the economy is doing right now. We appreciate it.
Got it.